Hey guys, this is Ravi Padmanabhan here. Today we are going to discuss on valuation of one particular stock. So I'm a stock market investor and I also teach people on investing in stocks. So the stock which you're going to look at today is like IRCTC. So some of you might have been hearing the news that IRCTC stock has been zooming ahead, and we are seeing that the stock is going to get split in the 28th. So my analysis on the stock, I was just looking at the valuation front, and I can find that the stock is quite expensive. In terms of the valuations, yes, it is around 1 lakh crore, almost like 94,000 crores, and the stock is trading at a valuation of 350 times its earnings. Yes, some of you might argue that the COVID situation, the earnings are pretty low. But even if you look at March 2020, the earnings was around 500 crore of profit. They closed at that year. So I would say, like, even on a 500 crore profit, if you look at the current valuation, the market cap is almost like 94,000 crores. So this is close to around 200 times. So which I feel is way too expensive. So I would suggest, like, if you're holding the stock, probably to look at booking profits over here, because when you buy an expensive stock, when things reverses, if you look at the valuation, the P ratio, if you can see, what has happened is, like, the stock which is available at cheap valuations now has gone extremely on the higher side. So the valuations, if you can see here, just trading at around 40 times earnings, but now I would say like 350 times earnings. You are not going to see such a huge growth happening in terms of this industry. So I would say, like, look at better opportunities ahead. So yes, the stock can go up because in bull market valuations go up for a toss. But the risk reward ratio, I would say the downsides are much more here in this stock. So better to look at booking your profits and looking at safeguarding your capital. Because sometimes what happens is, like, the decisions which you make, you need to also understand the risk reward ratio and see what is the downside. So I feel that the downside potential is much more. So okay, that you might miss on a little bit on the upside, but I would say that in the long run, I would see that the stock might have a correction possible. So better to look at taking your profits and looking at other opportunities. Thank you, friends. If you have any questions related to any specific stocks, just do feel free to put down in the comment box. We'll see if we can analyze it in the future. Thank you. Bye-bye.